All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're going to get started with our morning analysis, as we always do at this time of the day. So let's get started. We're going to start with the euro dollar, and the euro, obviously started off the week weaker. Okay. Following that, we had the stronger jobs on Friday. Dollar relinquished those gains. And the dollar rallied back a little bit here, and the euro basically, on Friday we sold off. Fortunately, I stayed long. Ended up selling a lot of it at highs or near the highs, above the. Here, let me remove everything. Keep that. Let's move this. Okay. On Friday, we rallied to the 38% retracement, and when we were above the 110, 20 level, I sold a lot of it, but I also bought more when we dipped back below 110, and I don't have as much as I had going into non-farm payroll, but you can see the reason why we rejected up there, and that's a big deal, and that's going to be huge, going into this week. All right, 110.35. The high on Friday was to 110.43, but 110.35, that was the 38% retracement. That's what we wrote down on Friday's bias chart. Okay, and so that will remain as resistance, 110.35. Now I know we went as high as 42, but that's just that was just a slight overshoot. It's still it's gonna be big resistance. Now support. Paul was saying he's looking for support down here at 109.20. Somewhere down here. That spike low. This is, again, these are all overshoots, so you can see that spike low here. That should support, and that's probably what Paul Franco was looking at. And I'll say 109.25, probably give you some really good support down here. Now the question is, are we going to even make it down there? So if you look from the spike low on Friday to the spike high, we're hovering around the 618 retracement. Okay, but yeah, I think the 109.25, that should offer really good support today, and if we can even dip down there, okay. But if I was, I'm still long the euro, by the way, and my cost average is 109.59, but I took off, it's all FIFO, so I was long a bunch from last Tuesday, Wednesday down here. I sold most of that, and then I started rebuying it down here in the 70s, and then so my cost average is now near current levels, which is fine. It's fine, and I don't have as big of a position as I used to, but I sure wouldn't mind even adding further to the euro longs at this point. Okay. All right, and also, we had this channel that we broke out of, came back and retested just fine. Following the jobs report on Friday, excuse me, like I said, excuse me for the yawns today. I was up late with my mom and my sister visiting last night because my mom's in town until later this evening. So I think that the euro dollar is going to continue to be supported here, and any rally up towards this 110.30 is going to be a little problematic, I would think. All right, let's see if we can get into the cable. So the pound also under some pressure today. All right, and the pound had a really nice rally to the 50% retracement. Okay, it's 50% retracement and previous support. We wrote that down on Friday. And by the way, I think we were off like by 1 pip on Friday. as far as our resistance goes here. And we're off just a few pips on the resistance in the euro dollar on Friday too. Well, that is going to continue to be really good resistance for the cable, and obviously dips down here to 141 will be supported. So 141, 142.50. Now, the problem that I see with the cable right now is that you'll notice, just, here's on the hourly, you'll notice right here, we are making higher lows. You see that? Okay. If we dip down to 141, the problem with that is now we'd be making lower lows. Okay. Which means that if we went down here to 141, even if we bounce from the support, we'll probably fall shy of, 142.50 this time, and then, roll back over. That would be my guess. All right. So 141, I believe, is still support if we can get down there, but 142.50 is big time resistance. It is a 50% retracement and previous support. Okay. So 142.50, it's key resistance. We went from a bearish trend back into the range, on Friday, and then support is 141. Okay. Hold on really quick. Okay. Let's go into the Swissy. Here's your Swissy. Now the Swissy's really strong. I got out of my Euro Swiss. And by the way, I just looked up on CNBC, and it's a shame, Nancy Reagan, the wife of former President Ronald Reagan, she passed away. She was former First Lady here in the United States. She passed away at the age of 94. Do you guys does anybody know what the I shouldn't joke, but I was gonna say a joke, and I was gonna say, do anybody know what the cause of death was with? But she was 94. I think the cause of death was probably watching the Republican debates in recent months. I would say it would probably weigh on her health tremendously. Could you imagine? Poor lady. She was like, oh my gosh. Anyway, but no, she'll be missed. She was one of the all the first ladies have been, great, I would say, but she's one of those really neat ladies. So anyway, Eric says she had class. Yeah, she was she had class. Alan says Hillary was great. Well, I actually liked Hillary Clinton a lot better as a first lady. Let's just put it that way. Anyway, but Nancy Reagan, she was something else. Anyway, okay, back to the analysis. Okay, so here's the Swissy. Now, I got out of the Euro Swiss last week. I took it off the table to compensate for a loss that I was taking in the New Zealand Canadian short. It's nice because I got out of the New Zealand Canadian for a very slight profit, which is good because the Euro Swiss, in my opinion, was actually added to my bottom line, which was good. But I picked up the Euro Swiss last week down here at like 108.30, somewhere around here. I sold it on Friday, like before we started rallying above 109, but I sold it here. But notice how weak the Swiss franc is, and I find that really interesting because I think we're in about ready to have a new cycle lower in equities, personally. So I think the Euro Swiss is going to stop. like probably right around here, which then also means that the dollar Swiss doesn't have much upside, is what I'm trying to say. The dollar Swiss, okay, is right up against what I would consider some, key resistance, right? Okay, and I believe that this parity level is going to offer a lot of resistance. Now, I'm not one that would short the dollar Swiss, but if you guys, want to trade it on the short side, I see the reasons why, and your risk is very manageable here. Your risk is above this resistance here at 1.0030, which, if you don't understand why we stopped there, it was a 618 retracement, right? So if you really want to short the dollar, I think the dollar Swiss is a good short here. Now, again, I'm not comfortable buying Swiss francs, not when they have, negative deposit rates the way that they have them right now. But again, this is probably not a bad time to short the dollar Swiss, okay? But I think key resistance is going to be 1.0030, all right? One point zero zero three zero. Wait, 1.0, yeah, 30 is resistance. That's going to be key resistance. Okay, support is obviously down here at 99 cents. Okay, that's going to be key support. And like I said, I think this is probably a decent short here, to head back down towards, towards the 90 cent level. I think that's probably where we're going, is probably 98, 97 cents personally. But, I'm not going to short the dollar Swiss. I'd rather short the dollar being long the euro. I'd rather, short the dollar being, maybe long the Aussie, short the dollar yen, but not the dollar Swiss. That's not my cup of tea. But for some of you it is, and that's fine. Okay, 99 cents will be support. All right, excuse me one second. My allergies are killing me today, so excuse me a second. Okay, I'm back. All right, let's go to the dollar yen. All right, so here's the dollar yen, and as you guys know, I'm short the dollar yen, and I'm long yen. Okay, my cost average is 113.85. I'm just sitting in it. Okay, I really think. Here, let me remove this here. I really believe that we are range bound, but if the dollar yen breaks through this 113.20 level, and we had a spike low because of the jobs report, but I'll tell you guys, if we break through this 113.20, that should expose, should start to expose, down to the 112, maybe even the 111. Okay, and we'll have to watch equities, but this 113.20 is really key. Okay. Okay, rallies above 114 are getting stuffed, and any rally to 114 and a quarter being sold immediately. All right, so if you get an opportunity to short up here at the 114 and a quarter level, it's a great place to be on the short side, in my view. Much better than the price that I have. We are in a bearish trend in the dollar yen. All right, let's go over to the Canadian. Now, this dollar Canadian, like I said, we've got to watch crude oil today, and let me go over to crude. One thing about my allergies is, this time of year it just kills me. My allergies get so bad, but it smells so awesome. like the everything blossoming here in the desert. It smells awesome. I wish I could just do it without sneezing. If you watch crude oil, because I can smell it right now, even through my stuffed up nose. If you see crude oil right now, we're up against the descending wedge. We're right up against resistance. Okay, I think crude oil is going to turn lower here. All right, I think this is where crude actually turns lower. Now, what will be interesting to see is how we respond today. You know, if we drop back below 36 bucks today, in my opinion, that's going to be a pretty bearish event. We do have 127% extension that is above 37 bucks. That, you know, obviously could be tested. The problem is if we break through that, then we might be breaking out. I just don't think, and let me get rid of this really quick. I don't think the descending wedge is quite built out enough, okay, for us to break out. I think we still have to build that apex more. That means, you know, I think we're going to turn here from $37, 36 bucks, and drop back down towards the mid 20s, personally. And then we may eventually break out, but I still think we're going to have some problems up here. I mean, if you look at it though, and the crude matters to the Canadian, that's why it's, you know, so important. If you look at it and you take away like these blue lines here, you know, you take away the blue lines and you're not looking at the descending wedge, you can see how bullish the market looks, and everybody's going, oh, you know, this is a big squeeze, you know, here goes crude. You know, we get, you know, here's day 2 of the rally. Everybody's pretty convinced that crude's going higher now at this point. But me personally, you know, I still think we're in this descending wedge. And I think there's more to be built with this descending wedge. I still think there's more to be built out here. So if crude can turn today, if crude oil can turn today, then I think this dollar Canadian is going to turn a lot higher. Now, what's interesting about the dollar Canadian is we gapped higher, and we are higher this morning. So we gapped and rallied in the dollar Canadian. And I think that is, you know, we need to pay attention to that. The fact that let's get over to the Canadian. Here we go. See, we gapped higher. This is where we closed. We gapped higher, and we've been rallying ever since, okay? And, you know, I do think the dollar Canadian is a great value down here at the 132 and a quarter. I just don't know if we're going to get down there, especially if crude starts to turn. Okay? All right, so anyway, let's we could mark the overnight low as, you know, as the support, but I really think support's down here at 132, like 132.30. It's going to be really key support. It's also trendline support. I mean, if you look at, you know, the daily chart, let me remove that really quick. Right there. Okay, you can see that support that comes through here. All right, where's resistance? So it's right here. So it's interesting. If we break 33.70, I mean, if we break 33.70, you know, we're going to rally. I'm going to write it just because we're right there. So, guys, if we break 133.70, I think you have to start looking for a counter trend move. Okay. So, in other words, if we break this, you gotta look for a rally. Okay. Keep your eye on the dollar Canadian, especially if crude turns lower. Okay. Let's go to the Kiwi. Wow, what a big bounce off support. Look how big that support's huge. $67.50. The low 67.49. It's huge support today. If you guys want to go along the Kiwi, you do it right now with stops below, you know, today's lows. I mean, I'm not going to buy the Kiwi. I'm actually short the Kiwi. I'm short New Zealand yen, a little bit of New Zealand yen, and I'm long the Aussie New Zealand. And I'm long a little bit of pound New Zealand and euro New Zealand, but they're super small. But if you want to get long the Kiwi dollar, your risk is below that support. Period. End of story. Okay. Resistance will be Friday's highs, which is 127% extension here. Okay, so the highs are 68.20. And we're still in a range while we're below here. Never mind that. I'm going to take that away. We're still in a range while we're below basically 69 cents. Okay, but looks like we should bounce here. All right, I'll be right back. When I come back, we will do the Aussie Dollar Index, you know, Peso, Nordic currencies, that type of thing. I'll be right back. Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. We're going to wrap up our analysis here, so let's get the Aussie dollar. And as you can see, the Aussie, now one of the things that's supporting the Aussie dollar, if you guys missed it earlier, is the record rally in iron ore at the moment. So we gapped down to start the week, and you can see the Aussie gap down, and then we just basically filled that gap. I mean, that I could pretty much say that's a gap fill. Now, here's the thing about the Aussie. If we can break that red line right there, which is the high from going back right here in August of last year, that high was at 74.38. On Friday, we went as high as 74.42. So 74.40 is major resistance. If we can break that, the Aussie is going to really, in my opinion, is going to start its rally. Okay, and we are in a range, but we are threatening to go bullish if we can break out. Okay, it's possible. You know, it's possible. Like I said, with the rally in iron ore, with the rally in copper, it's possible that we break higher. Uh, if that does happen, I don't know what I'm going to do. I mean, I might add some more Aussie New Zealand longs, but I mean, it's really bullish if we break out. Okay. Now, from here, any dip down to this breakout point is going to be very well supported. You know, the Aussie dollar just has not backed off, not much. And matter of fact, I think a dip right to here would be, but just like it was on Friday. You can see on Friday we dipped down to support and then bounced. Okay, yeah, we may have, you know, broken it just a little bit, but that doesn't matter. I mean, what matters is that we were supported at the 73.75, and that should continue as pretty strong support. Okay, should be strong support there, right through here. All right, let's go to the dollar index. Notice how the dollar index, here, let's delete this one really quick. Let me delete this fib. Okay. Notice how we broke down in the dollar index. Friday we rallied back, hit the underside of that trend line, came right back down. And so that means that any move up here to 98 cents is going to be very, very strong resistance in the dollar index. Support is 97 cents. And we are in a range. Now, you know, a couple of these ranges are threatening to break out, and one of them, you know, is obviously the Aussie dollar. Okay, and you know, the Kiwi too. Those are all threatening to move out of their ranges and start to turn bullish. Really close. And you know, if you go back to like the Aussie dollar, I mean, you know, this Aussie is like real key resistance at 74.40. You can always short the Aussie right now and just put your stops above like 74.50 or so if you really want to take on that risk. But it's possible. All right, let's go over to the peso. Now the peso is still trading below 18, but it's holding up really well. Okay, so here's your peso, and you know, we're really well supported down here. There's a 618 retracement that we are trading below, and that's, you know, that's from these recent trend lows. Okay, or recent support down here. I still think 18 is going to be really key resistance today, so I'm going to write that down. I really hope the dollar Mexican peso rallies back. You guys know that. I really do. So I can short it higher. I'm going to write down support as Friday's lows right there. We almost spiked down there today. 1772. Oops. Okay, we are in a range. Let's take a quick look at the Nordic currencies. See if the U.S. dollar, Norwegian krona is doing anything. Now, if crude reverses, oh, look at this. Wow. Check this out. Okay, so notice how crude oil or the Norwegian krona sold off towards support, right? Okay, so it's really interesting right here is the Norwegian krona has major support down here. And if crude oil rolls over and the Canadian weakens, the Norwegian krona is going to weaken too. And you can see how the Norwegian krona is already spiking up, which is interesting. I find very interesting. Um, you know, it would have been so much better if the Norwegian krona actually tested this support already. If we had already tested this support, I would actually consider going long the US dollar Norwegian krona, just because I think crude's going to roll over up here. But it didn't. So I don't know what to do with the Norwegian krona at this point. All right. I'm going to leave it off the bias chart for right now. Here's the Swedish krona. Still choppy, range bound. All right, so here's your bias chart. I'm going to leave that up for you right now, and I think we got that out of the way. All right. Oh, Michael just said the U.S. dollar Canadian's taking out that resistance now. It is, isn't it?